Hi, good morning, everyone. Welcome to our Preqin webinar on private investment benchmarking. I'm Jie Sing, and I sit within our Research Insights team dedicated to thought leadership, data analysis, and insight. And I'll be your host for today. Now, just a small amount of housekeeping before we start proper. This webinar will be divided into two parts. Part one, JS, who heads up our benchmarking product at Preqin, will deliver a keynote presentation on the good, the bad, and the ugly of private investment benchmarking. Part two, we'll invite our distinguished panelists to join JS in sharing some real-life examples on how the industry view benchmarking and what they do today. Now, this session will be recorded and all attendees are muted by default. There's a Q&A button on your screen, so you can use that to submit questions to our speakers at any time. We will consolidate and address them towards the end of the panel discussion. Now, we will also be using the chat box at the bottom of your screen to communicate relevant information to you throughout this session as well. So without further ado, let's welcome JS to kickstart the official program today.
All right, thank you, Tiesin. All right, everyone, good morning, good afternoon, and good evening, wherever you are. My name is JS, and I head up the development of our benchmarking products at Preqin. Thank you once again for joining us, and I hope everyone is keeping well. So in today's presentation, I wanted to share some observations and case studies on private capital benchmarking that we've seen and heard from across the Preqin network. So we'll be keeping this interactive. Do look out for the polls I'll be running throughout the presentation. So just to start off a little bit about Preqin, we provide data, analytics, and insights on alternative investments across all of these asset classes you see on the screen. So Preqin is headquartered in London, and we have 13 offices globally. And to date, we serve over 100,000 subscribers within the industry. So since we're talking about benchmarks today, a little bit about Preqin benchmarks. They are powered by the largest pool of private capital fund returns in the industry. And in particular, they are unique because we provide full transparency on the fund level performance data of each constituent. And furthermore, on Preqin Pro, we do offer a suite of benchmarking analytics tools, as you can see on the screen here. And we also host the largest source of since inception cash flow data that will support modeling and any deeper analysis that you need to do. So on to the agenda for today, the good, the bad, and the ugly. So I will first give an overview of benchmarking methodologies that are commonly used by industry today. And then I will move into a discussion on the known limitations and challenges we grapple with in applying some of these methodologies. And finally, I'll end off with some positive observations on how industry, as well as what we're doing at Preqin, to address some of these inefficiencies that we see. So just to kick things off, I wanted to run the first poll for today. So on the screen here, you will see the question on what sources of private capital benchmarks do you use today? So number one, do you use external sources like data providers, Preqin, or your consultants? Or number two, you only use in-house sources that you collect internally? Or number three, you use a combination of both? Or number four, that you actually don't use any benchmarks? Right, so please participate, and it'll be interesting to see most of you and see what your views are in terms of what you use today. And benchmarking tools are very important to the industry, both from an LP and a GP workflow. And that's something that we're seeing quite a lot more, especially with a focus on more data-driven practices. I can see that at least 50% of you have voted. I'll just give it another 10 seconds for the rest of you to just join in this voting of what sources of private capital benchmarks you use today. All right, I think I will end the polling. And so let me share the results here. This is what we can see here as the audience view on what sources are most used. So you can see that generally many from the audience are using a combination of external and in-house sources, and then followed by external sources being a means of benchmark. So thank you so much for participating in the first poll. So I think that really sets the scene for the importance of benchmarking to the industry. And why does the industry look to benchmarking and rankings to drive decision making? The analysis here on the screen is something that we've done at Preqin, and that might shed some light into the reasons. So here we studied the relationship between predecessor and successor fund quartiles, and we found a strong correlation between funds in the top quartile being succeeded by another top quartile fund. So this probably explains why 60% of the LPs that we spoke to actually cited past performance as the key factor in manager selection. And beyond that, of course, benchmarking is also a crucial part of LPs' portfolio monitoring activities, as an example. But that's not to say that only LPs are using benchmarks. As an example, we are also hearing from fund managers, and in particular, there's one RE fund manager that focuses on niche strategies in RE, in emerging markets. They actually told us that they run regular internal benchmarking exercises to monitor where they stand compared to their peers in every single market that they play in, just to keep an eye out for competition. So love it or hate it, I think the industry does need some type of a yardstick for performance comparison, and this remains an important part of our workflow. So I wanted to talk about a framework for how benchmarking is looked at across industry. And unlike the public markets, benchmarking in private capital is not as straightforward, right? So I hope this is a simple framework that illustrates the three sets of questions that we're seeking to answer in benchmarking. So for the first one on peer group benchmarking, it attempts to look at the skills of a GP compared to other similar GPs that play in a similar space at a similar point in time. So the question it helps LPs answer is, did we select the right managers, right? And from a GP perspective, it gives them a view of where they stand compared to similar peers. So most frequently, the way we would answer this question is by comparing the fund to its peer group's median of these 5 metrics here. And typically, funds are also assigned quartile rankings within their peer groups. And for example, at Preqin, we do an equal weighting of IRRs and TVPIs to get to the rankings. But of course, with private capital funds, usually it takes about 6 to 8 years for funds to settle into its final quartile ranking. So that has to be considered as well. And finally, what we're seeing more of is a comparison of loss ratios against peers being an increasing popular benchmark as well. So the second question LPs seek to answer is whether they have made good allocation decisions, right? So whether they have selected the right mix of strategies at the right time, and what we see them do is they would tap into our fund level performance or cash flow data to construct these custom weighted portfolio benchmarks and indices. So what they would do is to construct a benchmark that reflects their actual portfolio allocations, and then compare that to other alternative allocation scenarios. So that's the second methodology. And the last is to help LPs assess performance of their private investment programs in the context of their total portfolio. So we want to know if, as LPs, they want to know if they have made the right decision to allocate to private capital investments. Right, so for this, we have PMEs as well as private capital indices comparisons to look at the degree of out or underperformance versus publics. So In terms of PME methods, direct alpha is most recently developed, and it overcomes some of the flaws of the older PME methods in that it actually calculates the exact rate of outperformance rather than just make an approximation. So this is something that we've recently introduced onto Preqin Pro as well. And generally, I think what we see as well is LPs using the Preqin private capital indices, like subcategories of those, to compare with public indices like S&P 500 to assess the difference in the returns in the same period of time. Right, so I hope this gives you a framework for the three buckets of methods in terms of benchmarking of private capital funds. I wanted to move into a discussion on challenges when we talk about these methods, and it's well documented that there are many, but today I want to focus on 4 key themes. So before we dive into each of these challenges, I'd like to run a quick poll again, and you will see on your screen fairly soon. So we want to know which of these 4 themes you see as the biggest challenge in benchmarking. And I will give you a bit of context to each of these points, so stay with me before you poll. So firstly, the challenge we see here is selecting the best fit peer group benchmark. So there's always this dilemma between whether we should go with a more granular peer group or should we ensure a robust sample size for statistically meaningful analysis, right? So that's number 1. Challenge number 2 is how we can ensure to make sure that we have apples to apples comparison in fund performance analysis. So a number of factors affect our ability to compare GPs on equal terms, right? Things like whether they've used the same methods of portfolio valuation or IRR calculations, the use of leverage and credit facility, cross-currency factors, and more, right? So that's the second challenge. And the third challenge is around the shortcomings of traditional metrics. So as an example, IRR is probably one of the most used metric in our industry, but we also know that there are some limitations on whether it can give the full context of returns. And the last challenge we see is the fact that we are looking more at historical performance. So can we actually derive actionable forward-looking insight from that? Right, so of these 4 challenges, let's hear from the audience, which of the 4 do you feel is the biggest one for this discussion? So I see that many of you have started voting, right? So I'll just recap again. Number 1 is about that dilemma between sample size versus a more granular peer group to choose the right benchmark. And the second one is ensuring that apples to apples comparison for any benchmarking. And then the third one is around the shortcomings of traditional metrics. And the last one is the fact that we are looking at past performance, trying to make decisions. And so how can we do that? The challenge of doing that. Right, so thank you for participating. I will just end the poll now and share the results. Right, so there's almost half of the audience feels that the issue of apples to apples comparison is the biggest one, followed by, head to head between best fit benchmark and being able to look at forward-looking insights. So thank you again for participating in this. We'll be talking about each of these in more detail. And I'll start off with talking about selecting the best fit benchmark. So this tension between sample size and granularity is something that we grapple with. And here I've listed all the fund, deal level, fund manager specific parameters that we have seen being used by LPs and GPs in considering what makes a peer group, right? So it's usually a combination of a few factors. But here at Preqin, our market benchmarks are driven by 3 factors, and that's the fund's vintage, the fund strategy, so the fund type, and its geographic focus. We believe these are the significant determinants of fund performance. And if the sample size is insufficient, what we do is we would expand the fund strategy or geographic focus groupings, but still keep to the vintage groupings as far as possible. Right, so even though that's how we look at our market benchmarks, we do also acknowledge this rise of more niche investment angles, especially to analyze or benchmark funds by sectors or by country focus. And this is something that Preqin is looking to offer more broadly to the industry. For now, we have two recommendations on how to look at this. So number one, where market benchmarks don't meet the needs of your analysis, think about constructing custom benchmarks. You can virtually tailor custom benchmarks by any of these parameters I talked about here because of the fund level transparency that we offer, right? So because the constituents are fully transparent, you will be able to justify, or if you're on the receiving end of this analysis, to interrogate more deeply into why constituents were included or excluded into the peer group. But that gives you a nice way to be able to look at different types of analysis. The second recommendation we have is to use what we call our benchmark compare tool that allows you to evaluate a fund performance against multiple benchmarks in an overview. So you can see here in the animation that shows you how you can make sure that you provide more context in your reporting by taking these steps in consideration. All right, so on to the next topic on apples to apples comparison. And this has come out across the audience as the biggest challenge you probably see in benchmarking. So I talked about a few factors affecting fund comparability, right? Fund performance comparability, and everything from currencies to the valuation methodologies. And in particular, I wanted to take the example of subscription credit facility as a case study for this concern. So in this chart here, you will see that of all the funds with known credit facility status tracked by Preqin, we see an increasing prevalence of credit facility use, especially in recent vintage funds. So why is this important? Right? While these subscription lines are helpful tools that provide flexibility in deal making or to manage liquidity, what they do is they delay capital calls and that inadvertently inflates IRRs, right? And this has been made worse in recent years as repayment terms for these facilities become longer. So this has always been a big focus for Preqin. So for example, we actually look at all of the performance data that we collect that goes into our benchmarks and ensure that there is a high level of comparability by validating that they used standard valuation methodology, that, you know, for example, in IRR calculations, that the GP commitment portion is not included. So we do take a bunch of steps to make sure that there's comparability. But in particular, on information on credit facility, this is not as transparent. And while we track credit facility status of funds on Preqin Pro, it is something that is not easily or openly shared enough today. So our recommendations for consideration is really for LPs and for the wider industry to think about pushing for standardized disclosure and reporting formats. And for example, in North America, we see more LPs adopting ILPA guidelines for how to request and what to request in terms of information from prospective GPs. And the second thing we're seeing is also a greater focus on analyzing the cash flow details. And specifically on reporting on what portion of the unfunded commitments have been drawn on subscription lines. Right, so this is something that we have to work together as an industry to really tackle so that we move towards a really better way of looking at apples to apples comparison across funds. So lastly, I wanted to talk about the challenge of shortcomings of commonly used metrics like IRR. So even though this came out as the smallest challenge across the audience, this is a well-known limitation, right? So this case study here shows 6 different funds with the exact same TVPI. And 2 of these last funds here have an early distribution. So you'll see different cash flow timings, but the last 2 here have early distributions, perhaps from an early win. And that resulted in much higher IRR compared to the rest of the fund with the same TVPI. Right? So this illustrates that IRR is susceptible to early good performance because of that reinvestment assumption, which is practically not always the case. So if we look at an alternative metric like modified IRR, right, it seeks to overcome the reinvestment assumption problem. And we can see here the effect of that higher IRR is mitigated, and that deviation between among the values is a lot smaller, right? But this is an example of alternate metric, but with every metric there will be plus and minuses. So our recommendation at Preqin is always to assess IRR in conjunction with other metrics for the full context. So we always present IRR with TVPIs, DBIs, RVPI with the context of how much called capital there has been. And that is key to the analysis. So we are also observing that LPs are increasingly supplementing their analysis with alternate metrics or doing more deeper IRR attribution assessments. So GPs should be aware of these trends, and also Preqin will be continuing to expand our benchmarking toolkit on Preqin Pro to help you with these analyses. All right, so we talked about the challenges of some of the methodologies we have today. And just to switch gears, let's move into some of the positive progress and positive developments that we're seeing in the industry that seeks to address some of the challenges that we've talked about. So in the next few slides, I'll talk individually about these positive developments. So if you remember the last challenge that I did not fully talk about, which came up as a second biggest challenge for the audience in terms of not being able to draw forward-looking insight from past performance. One of the bright spots is really leveraging on predictive analytics to support decision-making and performance analysis. So here I brought up 2 case studies as examples of how that can be applied. So on the left here, you see case study 3. It shows you a snapshot of how we've derived some predictive returns using cash flow forecaster. So we did so by calibrating economic scenarios to Preqin's historical cash flow data and evaluated expected IRRs across different vintages. And so this is one nice example of being able to forecast some of these returns. And on the right is another case study, and that's something brewing out of Preqin's data science R&D lab. We are looking at some data science techniques to estimate cash flow values with a high level of confidence to enable more complete performance analysis, especially in investment areas where there are more white spots in the data, right? So these are some examples of how predictive analytics can be applied to help bring in some forward-looking insight. And on this note, I wanted to run the next poll with the audience on whether you will use such predictive analytics if provided by external sources and to support your decision making, right? So the options are yes, or yes only if you understand fully what the methodology are, or 3, no, because you already have in-house capabilities that do so, or 4, that it's not something that you're ready to do, so not now. right? So we want to hear from you on whether you will use predictive analytics provided by any data providers to support your decision-making and your analysis. Right, so I'll just give it another last 10 seconds for more of you to let us know your thoughts. All right, counting down. Okay, so I'll just end the poll here, and we can see that it's an overwhelmingly answer of yes, but only if we understand the methodology behind it. And I think that's definitely the key to this. This is what we see, that the methodology cannot be a black box. We need to be able to untangle and work backwards to see how some of these estimations and forecasts are being done. So thank you for participating. I hope you can see the results here that yeah, it's overwhelmingly yes, and only if we understand the methodology. So thank you so much. I will move on into my next point on industry transparency and standardization. So another positive observation we have made, particularly for our region in APAC, which is traditionally more opaque, right? We're seeing this movement towards greater transparency and standardization. So Preqin, at Preqin, we're actually seeing greater participation and voluntary submissions from managers, including those in APAC. And with performance data, we have, over the last 18 months, added over 1,300 unique fund level data, performance data to Preqin Pro. And that speaks to that increased participation and willingness for managers to share this information. Particularly as some of the industries within our region mature, we are seeing industry associations, regulators starting to step up and take the lead on addressing some of these challenges and pushing for greater standardization and transparency practices. So at Preqin, we are also responding to the greater demand for country-specific or sector-specific benchmarks, something that is a big focus point for my team. So other than the usual Asia or Asia-Pacific market benchmarks that we launch, we also have looked at more granular, let's say, China-focused, Southeast Asia-focused, Japan-focused market benchmarks, just to name a few. And that is to really address that need and that demand for, the more granular measures of performance. So in this case study here, I wanted to share an example of how Preqin has collaborated with some industry associations across the region. And for example, we have Japan VC Association and the Korea PEF Association that we have worked with to produce some granular analysis returns for a segment that has been previously quite opaque to the market, right? So this collaboration has enabled us to be able to not just showcase how the industry has evolved over time, but to highlight some of the unique characteristics of them. And that has helped LPs for the first time be able to have a deeper understanding of more niche areas, and also benefit the GPs by understanding where they stand in the market. So I wanted to end off today by sharing also a little bit on what we're hearing from LPs. While past performance is one piece to the puzzle, it really takes a holistic process of many factors that are being assessed. And we'll talk more in the panel discussion later. But some of the factors we're hearing are things like, number one, the management team experience. And in fact, LPs are taking note of individual lead partners' track records for specific deals, and making sure that that this is taken note of in the situation of people movements. The second point is an increasingly important factor on looking at ESG policies. The third is how LPs want to understand the typical cadence and sizes of each manager's calls and distributions so that they can understand how feasible that is in the context of their total portfolio cash flow schedule. And finally, LPs also like to use our fund series tools to assess the key track record across a manager's whole fund series. And here's an example of one of the tools that we offer on that fund series analysis. So this one here shows you the fundraising activity and how that has changed across the series. And so LPs want to see if there has been any change in fund sizes across the series, what is the length of time on the road, what the target size achievements look like, and the timings between fund closures and new fund launches and things like that. Right, so here's one example, and within the fund series tools, we also have LPs looking at insights on the sector and market expertise of GP. So they want to see if the investment activity and the expertise on specific sectors have grown and has been built upon across the series. Thirdly, they also want to look at the experience with certain types of LPs and what type of LPs they attract. And finally, also, they are analyzing that trend of returning investors, as an indication of how satisfied the existing LPs are with the working relationship. So we're really seeing a more data-driven, more systematic movement towards screening process, looking at track record, and again, past performance is one information, one piece of the information, but it's really a range of factors that are being assessed. Right, so this is a big topic to be put into 25 minutes, but here are the takeaways. Benchmarking methodologies may not be perfect, but they give us insight and are helpful when they are applied in the right way. So it's really about using the right tools for the right job and understanding the limitations and the context. So we discuss a range of recommendations and positive developments here, and this is a recap of some of what we've talked about today. And here at Preqin, we're committed to collaborate with industry, with associations, with academia and other players across the industry to really drive more comprehensive benchmarking practices. And we will also continue to expand on our toolkit of analytics tools to help you make better informed decisions. So with that, that was the good, the bad, and the ugly of benchmarking today. My name is JS, and I thank you for your time.
Thank you, JS, for a very comprehensive discussion on the topic of benchmarking. Now, while she prepares to moderate our panel for the next segment, just a quick note that this webinar is being recorded, and all content, including the recording and the slides used earlier, will be sent out to all registrants via email tomorrow. I would also like to take this chance to draw your attention to the Q&A function at the bottom of your screen. Feel free to use that to submit questions to our panelists at any point during the discussion later. We will consolidate and try to address them towards the end of our panel. So, turning to the second part of our webinar, JS will be joined by our esteemed panel of experts to provide an industry perspective on private capital benchmarking. Jean, Masahiko, Sebastian, and Sam are distinguished in their respective fields, and they will be sharing their views and some anecdotes on the topic of benchmarking today. So I'll now hand it back to JS to kickstart our panel discussion.
Thank you, Jiaxin. So as we move into the panel discussion, we will hear about the practical and real-life anecdotes from industry and particularly from both sides of the table. So we will be hearing the GP views across different markets as well as the LP view from Sam from Tokyo Marine Asset Management. So we're very honored to have our panelists and we will be taking the opportunity to also answer some of the questions that have come in from you in the pre-webinar survey. All right, so thank you everyone, and it looks like we have our panel with us here today. Let's start off with an introduction of you and your firms. So I'll start with Sam. Please go ahead. Thank you.
Sure. My name is Sam Kata. I'm the head of private equity at Tokyo Marine Asset Management. I've been investing in private equity for about 20 years now, globally. I'm very happy to discuss the benchmark today because it is obviously becoming a very difficult issue these days.
Thank you, Sam. Thank you, Sam. Right. So, Jean, an introduction of you and your firm, please. Thank you.
Hi, I'm a director of the global portfolio management team of IMM Investment currently, and I spent some time at Deloitte US and Korea practice providing tax advice for multinational companies on outbound investment in the past, and also spent about some time at Samsung SRA Asset Management, where I managed the real estate fund. I joined IMM Investment to be part of global expansion. Just to introduce about my company, IMM Investment is one of the Korea's leading alternative asset management firm focusing on venture capital, mezzanine, infrastructure, and aircraft investment. Established in 1999, and we currently have over 50 professionals, offices in Japan and Hong Kong. And we manage about 10 VC funds and 22 private equity funds, over 80 portfolios currently.
Thank you so much, Jean. I think we're looking forward to hear your perspective from the Korea segment, especially. So thank you for joining us today. Next, Sebastian, please go ahead.
Hi, my name is Sebastian Sogelang. I'm from Kejora Capital. Kejora Capital founded 2014, so around 6 years ago. I actually been an entrepreneur for around 20 years. I started my first companies in Europe, and I came back in 2013, 2014 to basically start Kejora and basically focusing on the tech sector growth, which is starting around that time. In Southeast Asia, and right now we're doing early stage and growth stage investment in Southeast Asia, predominantly in technology.
Thank you, Sebastian. I think that would be really interesting for us to understand more insight on, let's say, the tech sector focus type of strategies, especially in Southeast Asia. So thank you for joining us today. Lastly, and not least, we have Masahiko. Please go ahead.
Hi, everyone. My name is Masahiko Honma, the co-founder and the general partner of the Incubate Fund. Incubate Fund is the largest seed and early stage focused tech VC in Japan, investing the 250 startups and managing about $500 million US as a size. We've been investing the Japan's origin, the good tech startup ranging from the outer space, robotics, AI, medical, SaaS, VR, AR, gaming, wide coverage with the tech startups we've been investing. Today, I'd like to share my experience and view what's happening inside Japan's ecosystem regarding the benchmarking thing.
Thank you so much, Masahiko. So we have really specialists across different sectors and regions, and from a GP side and LP side on our panel today. So to kick things off, I'll pose the first question to Sam. So from an LP perspective at your firm, how do you actually conduct due diligence and fund screening, and how does benchmarking fit into that process?
Right. So benchmarking is a very integral part of due diligence. And one of the issues with benchmarking these days is because, funds globally have become much more specialized, that picking the right versus become a little bit more difficult. You mentioned in your previous keynote that you get, and it's as much as the more granular you get, the universe of comparing GPs declines, right? So there's a trade-off between trying to do an apple-apple comparison and choosing the right universe for comparison. So one of the things we struggle is trying to figure out what the right mix is, or where to balance to what the client mandate is, right? If the client mandate is very relaxed about where the strategies or the geographies you can invest in, we ought to be more focused on a fairly large universe, trying to compare with a bigger universe. Whereas if the client is very specific about where the money goes, what kind of, in terms of geography or style of investment, what kind of funds we're choosing, and what kind of peers we're comparing that to.
Thank you, Sam. I'm sorry, your audio was cutting in and out a little bit. So maybe we can try again later, maybe without video. But I think we got some key points from there in your observations of especially specialist funds, and that dilemma of selecting an appropriate benchmark. So thank you so much, Sam. So Sam, in particular, do you see any difference in practices when you are assessing an opportunity in Japan versus Asia versus an international fund?
Right. So I'll try to speak a little bit more. I hope this helps.
Yeah, this is good.
Okay?
Yeah, okay. Perfect. Thank you.
So the issue in globally is and Asia is very different, right? Because in terms of the universe, the types of data that you can get in Asia, and particularly Japan, is much more limited than if we were investing in the United States or Europe, where there are more GPs disclosing data and contributing to data providers, and we can get a very big universe. We appreciate Preqin's collaboration with Japan's VC Association to come up with the VC benchmarks in Japan. But even with your efforts, the number of GPs in that universe is quite small. Trying to find meaningful data in a meaningful universe in Asia and Japan in particular is quite difficult.
Yeah, I think that's definitely what we're seeing, and I think all these efforts that we are putting in to move the needle on transparency, hopefully we'll reap the returns in a few years. So thank you for your insight on that. So moving on to a GP perspective, right? I wanted to ask first to Jean, how and when does the topic of track record come in your LP meetings? And how do you think these conversations around fund performance have evolved with the LPs over the years?
The LP request of the track record starts from the fundraising stage as part of their due diligence process, as Sam mentioned. The Korean leading institutional investors actually go through bidding process and request standard format of proposal, including track record, exceeded and ongoing fund level, and also investment level. Mostly the IRR and the cash multiple of the invested capital are the metrics mostly used. On ongoing basis, IMM issues portfolio management report semi-annual basis for including the analysis of the performance of the fund and investment with the cash flow financial statement and the fair market value included actually. And IMM also internally managed to update and monitor the track record of the all funds and portfolio monthly basis to cope with LP requests at any time. And the challenging part is the fair market value valuation, which is done semi-annual basis and sometimes quarterly basis, depends on the request of the LPs. The method of the valuation really differs by each portfolio on their nature of the investment. In general, the cost base is used for the investment under 1 year. However, with the special situation like the COVID-19, there has been specific LP requests to update the valuation with new assumption taken that we have been working on to provide the valuation information.
Sure. Thank you. Thank you, Jean. I think that's really helpful for us to understand more of the practices on Korea and also for your firm. I'd like to pose the same question to Sebastian just to understand how you see it from your side.
Yeah, thank you very much. So I mean, Kijora, we are 6 years old, right? In the beginning, and if you see, as I mentioned, we are focusing on technology. So the market is actually quite new. We started probably around that time. And when we started 6 years ago, obviously there was no real track record, on even a comparison with other benchmarking, other companies, other VCs, other GPs there. So, and interestingly, we see a lot of, obviously now we have track record and that we can now use it more, and we are happy that from starting with a small fund, now we grow into 400 million assets under management within a very short period of time. But the question has evolved a lot, right? At the beginning, we even need to explain what is technology, right? Right, in this region, or why is technology important in Southeast Asia, or why is the right timing for Southeast Asia for technology? And then after that, the question moved to, is the market big enough, right? Will there be unicorns and this kind of things? And once the unicorns established, and there was IPO, will there be exits or IPOs? And then the exits, IPOs happen. And now the question is it too late already? So what I'm trying to say is the market, the questions always change. Obviously, track record is an important part, right? But how we handle that, we try to combine data, we try to combine benchmarking, global standard reportings, but also maybe in Southeast Asia, predominantly also very important to build a relationship and basically a very close relation to our LPs, right? Yeah. So we kind of created experience because you have limited data. We introduce our companies very closely to our LPs. So we also are trying to build synergies, create experience. We improve communication, dialogues, collaboration with the startups. We even try to build technology and know-how transfer, basically building a long-term relationship between our LPs and our portfolios. And so far, this type of relationship is indeed greatly appreciated by the investor as we are moving forward together.
Thank you, Sebastian. I think that's really interesting that the topic of track record doesn't stop at just past performance, and it's a range of different factors, and even on relationships between the underlying portfolio companies and the LPs. So thank you for that perspective. So I think it really helped us give a better idea of how some of these conversations go between GPs and LPs. So I wanted to move into the challenges that we spoke about, that I spoke about earlier. So the next question I would like to pose to Masahiko. So from your perspective as a fund manager, would you be able to share how and when you actually conduct benchmarking, and what kind of challenges do you face, and how have you been able to overcome that?
Okay. Actually, we are managing our PIPS fund right now, and we have the 10 years over history doing the venture capital business in Japan. So that we already have some sort of the data of the DPI, TVPI, IR, and the deal distribution data. But challenge that we are facing, especially for when we are receiving the fund from the institutional investor domestically in Japan, from the overseas, both cases we need to share some sort of the benchmark data together. That's to compare the apple to apple in the Japan's our fund with the other Japanese VC, as some mentioning that the number of the benchmarking data. Of course, thanks to the JBCA and the Preqin, we just started to the collecting and preparing such infrastructure just now. but it's not easy to compare the data. That's the only issue. But I think at the same time, historically, the Japanese VC have not seen the huge demand to the communicating with the financial institutional investor, because most of VC raising funds from the corporate or individual investors. So that's why I think the situation has been changing. We will see more and more structured data domestically from the Japanese VC ecosystem, I believe.
Thank you, Masahiko. I think that really gives us a nice insight into the Japan VC ecosystem and how some of the things are done there. I think in the same strand, I wanted to pose a question to Sam from an LP perspective. Would you be able to give us some real life examples of benchmarking challenges, especially when you're doing portfolio benchmarking or any manager screening?
Oh, sorry, I lost you for a second at the end about portfolio benchmarking.
Yeah, no problem. Yeah, so the question is whether you are able to give us some real life examples on the challenges you face in portfolio benchmarking or manager screening when it comes to let's say specialist funds that you talked about earlier.
Right. One of the phenomena these days, I guess, which is changing times in the industry, is one, something you mentioned in your slide about lots of GPs using leverage now. The other part is that there are lots of clients who are investing in debt funds these days, right? And those are a lot more tricky than equity funds because, lots of funds invest in different parts of the capital structure. They also have different levels of fund leverage, right? And some of them have 2, 3, 4 times leverage on their funds. And, looking at net LP IRRs is not meaningful in terms of trying to figure out whether, how they compare in terms of making money in the portfolio. So the traditional methods that have been pretty normal in the industry of looking at LP net returns as the typical benchmarking figure is no longer valid in this new century, and we sort of need to make sure that the investors as well as the industry as a whole make some meaningful new paradigm changes to try and catch up to these phenomena. Right?
Thank you. I think, Sam, you summed it up well. I think this is where directionally we need to be headed. So thank you for that. All right, so moving on to the next question. It's something that we have received from the pre-webinar surveys on questions from the audience. So one of the challenges that is being highlighted in the industry is this issue of, let's say, lack of performance reporting standards. So in particular, I wanted to pose this question to Jean on what your observations are in Korea, PE, for example. Are you seeing any prevailing performance reporting practices that are widely adopted by GPs in your market?
Although Korea PE industry has been growing significantly, it's been kind of early stage as far as standardization and having transparency of the performance matrix. And as we view, it's significantly because there aren't many exceeded and liquidated funds yet. So far, Korean GP companies have been coping with customized format of reporting by each LPs requested in the past, but there is actually currently a movement going led by the major institutional LPs to adopt standardized format of reporting that can apply to all of our GP companies and be efficient of dealing with the same type of information over and over. For example, MPS has adopted their own system to manage the performance reporting several years ago, and they have provided training to these GP companies and AMCs how to use it. And each month they collect, from their GP companies, they get information about portfolio performance. including like cash flow and the IRR and ROEs. Also, we do see movement to be more standardization of the valuation, especially coming from the regulatory requirement. And this is also changing that the valuation is more linked to the LP's KPI, that we have more incentive to be more up to date on the valuation of the investment these days. However,
so much, go ahead.
Some challenges. So that standardization of the method of the valuation doesn't necessarily mean that the result has the result is actually there is a quality of the result that you actually follow the guideline by the LPs, but there are lots of cases that the information is not available, especially on the investment made in overseas, time and stuff. That we do find challenging that the valuation result doesn't really provide the proper intrinsic value of our investments. So that's a challenging part.
Right. Thank you so much, Jean. I think you made that distinction between distinct quality and standardization, and both needs to be pursued in the same track. So thank you for that. I wanted to also hear views from Masahiko on what you can share with us on what you see in Japan VC around performance reporting in the industry and performance reporting practices adopted by GPs.
Okay.
Yeah.
The performance practice is still the ongoing process, I believe, in terms of the communication with the LPs. Of course, LP wants some sort of the standardization of the data in settling and being settled. But it's the communication or how the LP will use the standardized data is a bit different. I'm feeling that some people said that this just used for as a guideline or some sort of supplement data, not necessarily for the very the mass decision making practice, but they need this. So then we just tailor and customize the data as in accordance with the requirement from the LP. That's the reality we are doing. For instance, let's say the market-to-market accounting standard going to be the more required for the startup investment as well. But if we apply this to the early stage investment in the tech sector, it's not easy. But at the same time, we as a GP try to making a best effort to closer to the such a requirement and standard as possible with the reality of the startup world. That we are doing. And also the both of the gap in the getting narrowing. And that's I think just because of the both of the effort they're both making from the LP end and the GP end.
Yeah, I think that's really true, Masahiko. What you mentioned about the efforts being pushed, being brought in by both LPs and GP side, and in particular, I understand that for example, the collaboration we had with Japan VC Association, like how do you think such programs actually help the industry push forward with some greater level of standardization?
Oh, yeah, this is definitely a really big push and moving forward. The JBCA and Preqin settling the standardization of the data and of the BCs. Of course, most of the BCs are really welcome to just submit the data and to get into the more closer to the world of the institutional investors world. Before that, this is 100% the disconnected. But now is this gradually they're being connected, and also that we just started a good dialogue between. I think that this definitely this is moving forward a really good step.
Yeah, thank you so much, Masahiko. So finally, I wanted to talk about transparency. I think that has been the theme that has been recurring throughout our discussion. So I wanted to understand views on transparencies, and Sebastian, I want to pose the question to you on your views on how, especially in the context of Southeast Asia, the region is quite in early days in its sort of transparency, taking transparency as a key focus point. So what are your views on these initiatives, and what do you think would be, you know, the pros and also the threats of this greater transparency for the industry?
Yeah. No, obviously for us, we are very welcoming this. We need more data here, right? We need, that's why we welcome very good collaboration with database like Preqin. We're working on standardization. We're working with, to collect more data of the companies here for more apple-to-apple comparison. We're working with third-party appraisals, fund administration to make more a process here, because at the end, we actually even the whole VC and PE is quite in the early days here, right? So I think the more data, more transparency you have, it's the better for us. And actually, as I mentioned earlier, for us, we don't see, so far we don't see any threat. It's actually a big opportunity for us, and it's actually becoming part of our strategy, right? Because I mentioned earlier, we want to build a very good connection between our LPs in different regions in collaboration with the portfolio companies, because at the end, that's what helping so far, what we see very helping us to grow, our startups to grow in connecting and building synergies. For example, we have investors in Southeast Asia. In obviously Southeast Asia, we have many different languages, many different cultures, many different investors. And we try to see what is the strength of this investor and what we can contribute and connect with the startups. So, especially here where this network of our LPs, they've been building for over 30, 40 years, right? So it's very good to help the young startups to grow in multiple markets. Especially also, we also trying to build relationship with LPs in other markets like Korea, Japan, China, and because they have a lot of experience and even access to know-how technology, which at the end become our strategy to help those technology or know-how to transfer it to this region. So for us, we try to encourage regular meetings between us with the LPs and our portfolios. We do roadshows even to other markets, to Korea, to Japan, to Thailand, building a very close relationship with the portfolios. At the end, it's a win-win because some of our LPs also here in the region will learn from it, building more innovation in their own corporate, right? At the same time, we have access to more technologies, we're building more trust. We started also faster growth of the startups, less risk with regulators because these LPs sometimes can help, already have a very good relationship with the regulators. The cost could be even decreased, so lower cost, faster profitability, and help increase market leadership for our portfolios. So overall, it's a very good experience with us, with building more transparency in relationships.
Thank you, Sebastian. I think that's really well said. In terms of to wrap up our discussion today, I would like to pose the question to Sam from an LP perspective. So when we're talking about performance transparency, what specifically are the type of information you will require from fund managers to provide to make sure that you can make better decisions within your firm? And one example you mentioned was information on use of leverage and things like that. So could you expand on specifically what type of information you hope to see more of from fund managers?
Right. I think this whole issue goes back to many of the slides that you used a little earlier. We are trying to figure out exactly what kind of investment returns these GPs are generating, which means that we need to look at gross investment returns without leverage. So we request gross cash flows from the general partners to try and construct those returns. You mentioned that IRR is not necessarily the best number to use, and we look at TVPI and DPI and all these other numbers as well, and we request similar information from general partners to be able to construct those numbers. And it's a combination of a lot of things, right? And transparency is, generally speaking, very welcome and great from a limited partner's point of view. Right. But one caveat is that if you have to sacrifice a reduction in the universe to get that transparency, it becomes a bit of an issue, right? If some GPs are less willing to provide the data, if the request becomes too much or too transparent, and reduces your universe, then that reduces the quality of the number that you're looking at, and it becomes a trade-off, and it becomes a difficult issue for us to swallow. So that's probably a big issue, for you to struggle with every day, but something that we look at as well. Yeah. Thank you, Sam.
Yeah. So I hope you gained a lot from this industry perspective on benchmarking from our panelists across different specializations and areas. I certainly did. So thank you again. We have Jean from IMM Investment, Masahiko from Incubate Fund, Sebastian from Kajora, and Sam, of course, from Tokyo Marine Asset Management. Thank you so much for your time and for joining us in the panel discussion. We see a few questions that have come into the Q&A. So I think we have 2 minutes left, so I will just maybe pick one out and just answer them. Okay, so there was a question that came in about whether, okay, I think it was about survivorship bias. Right, so the question was around the fact that benchmarks are subject to some kind of survivorship bias, and how do we account for this in our analysis? I'll start off, and anyone maybe Sam, you can also jump in with your thoughts on that. From our perspective at Preqin, we have fund performance data from both LP source and GP source. So it's quite an equal rating of both. So that taken together, we were able to mitigate this survivorship bias to some extent. But with any benchmarks, I think there's a lot, there's always some kind of bias to that. And that's something that we allow deeper analysis into with our fund level transparency. And it's something that with greater participation and greater representation across the industry, we can mitigate. Sam, is there anything here you want to talk about as well?
Yeah, sure. I have 2 points. One is that there's always survivor bias in any benchmark, but in private equity, it's less worse than, say, other asset classes like hedge funds, for instance. Right. I think it's much more prevalent in a different asset class, and I think private equity, it's a little bit more controlled. The other part is the anecdote that I want to provide to the person who asked the question is that there are lots of other issues with benchmarking before survivor bias becomes an issue. One is that, for instance, if you look at the presentations of general partners that they send out to the pitch books that they send out to limited partners, 70 to 80% of people say they're top quartile, and that's not technically possible, right? So trying to figure out how it's used, whether you have the right methods and perspective in figuring out what the right comparison is probably much more important than worrying about the survivor bias.
Thank you, Sam. All right, with that, I think I'll wrap up our discussion for today. Thank you for joining all of us, and thank you to the panelists for being part of this discussion. I'll just hand it over to Tien for now.
Thanks, JS. Great discussion with lots of insights from each panelist. So thank you once again to all our speakers, Jean, Masahiko, Sebastian, Sam, and JS for an excellent webinar. A shout out to also my fellow colleagues who work behind the scenes to ensure this ran smoothly. And thank you to all our listeners who joined and stayed with us throughout. So we hope that you found this insightful. We'll be sending a copy of the deck and a link to the recording. So do keep a lookout for the email tomorrow. Finally, we are keen to hear your feedback on today's webinar. There's a SurveyMonkey link at the end, so do drop us a note on how you think today went and tell us what you'd like to see for future Preqin webinars. So until we meet again, stay safe and stay healthy. Have a good day and goodbye, everyone.
Stay safe.
Thank
Thank
you.
you so much.
Bye.
Bye.
Bye.